Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day market video for November 1st, 2022. Yes, 2 more months to go of this year, and then we're on to 2023. So in this video, we'll talk about the price action, of course, and the indices, as well as what happened in the bonds and the dollar, and we'll talk about some of the movers, and then, of course, I'll give you my viewpoint on what I expect for the Fed tomorrow, right? That is the main event for this week. And a couple other, catalysts in some of these earnings. A lot of earnings reports to go through. Again, kind of a complicated time right now because we've got so many earnings reports plus the Fed. So we will get through a quick summary of that. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. A couple of things before we start. If you like these videos that I put out during the week for free, please give me like a thumbs up, as well as subscribe. And of course, if you want to see what goes on more during the trading day, as well as our pre-market sessions, which we've made some pretty good calls lately. Not the first trade of the day that I did today, but yesterday thought energy could outperform. And we'll get into today, but you can sign up at Tribeca Trade Group to be a member to see everything that goes on behind the scenes. All right, so let's talk about some of the movers. Well, the thing that I've got highlighted up here is the Qs. Just really tough for these Qs. They, and the components that are involved. I think Amazon may have taken out not the lows, the absolute lows from its earnings, but again, just moving down, and it just kind of tells me again that this is not where this market is really has a high demand right now. And this is just one name, but going across and looking at the majority of names that are in tech and growth right now, it's a struggle. It's a struggle for them to kind of maintain when they do have some strength to them. So I'll get into that in just a minute, but I thought today was pretty tricky. We had some economics. We kind of came in today with a gap up, and there wasn't really any major news behind today's gap up. Bonds were strong, the dollar was weak, and of course, equities were up. But that's sometimes how it is. There doesn't always have to be news associated with these moves. I had a couple questions today about, hey, what was the news behind that? I didn't see any major news. Clearly China had reversed on rumors of reopening, which we don't know if true. But remember on Friday, the market just went up and stayed up on Friday, and there was really no news on Friday. I mean, Amazon had bad earnings, Apple had good earnings, had better earnings, but there wasn't really anything that was driving those huge moves. So, just keep that in mind with trading. Is sometimes you're just not going to get it. You're not always going to get a story or a headline that is going to sum up the day's price action, right? Of course, financial news tries to put a nice bow on the price action every day, but half the time it's really not. It's really not what happens. Remember, it's about demand and supply, right? And it's about more, aggressive. It's the old term, of course, that people make fun of, more buyers than sellers, but it is more aggressive buyers than sellers, right? It's if people really want to be involved in the market and what areas of the market, that's what really drives the market action. We do get headlines as well, but in any event, here's where the economics that kind of turn things a bit. We had the ISM numbers, and the ISM numbers weren't like awesome by any means, just barely expansionary, above 50. Right. So that number wasn't, altogether awesome. Construction spending was better than expected, and the JOLTS jobs openings were higher than expected. But the PMI numbers. So if you go to the price action for the day, so I mean, like this wasn't stellar. Data points for today. So, again, I just think right now in this market, gap ups are just inviting profit takers to basically come in. It really kind of gave a good excuse to go ahead and take profits, knowing that we've got a big event for tomorrow. I think that's more than anything, we started to kind of fade, even before that data, those data points came in. Here's a 945 and then further down. So that's really my explanation for the day, is that we've been kind of hot coming into, I think people really want to pay attention to what Powell says rather than really have a lot on. And I would rather, looking at how today unfolded, I would rather not have a scream higher into a Fed meeting. I don't think that is a recipe for success. So, here we are, in terms of the S&P, we're going to go through, multiple time frame analysis because we will see some clues on the 1 hour chart. But right now we're just kind of coming back into the 50-day moving average and to the that's the 5-period moving average too. There's nothing wrong with that. So far, I would expect some backing and filling, and even a test. This is the new value area, by the way, for November. We start a new month, so we get new value areas. That value area, of course, using volume at price, is based on the October activity. So that really can come into play. Notice how the top of value checks is very close to the 20-day moving average. So even if, by chance, as we always like to do at Tribeca Trade Group, is run through a scenario analysis. If this happens, what do you think, the next thing is going to happen? Or if this happens, what's the reaction from that? So if Powell tomorrow is hawkish, a check back to 37.90 would not be a horrible thing, right? And then the other thing too, which, we've talked a lot, and I think at this point, everybody's talking about the Dow performance in October, but, there's nothing wrong with this coming in as well. Now, of course, one of the problems here that we've highlighted is that, of course, I've got a trend line drawn in here, but we've got lower highs. So at some point we have to get out of the pattern of making lower highs, but this is a really aggressive move. So what normally happens, or what could happen, what's one particular scenario, because this is like a double bottom type W pattern, right? Maybe we come back in here and kind of wait for this 20-day moving average to kind of catch up and kind of test in here. Again, doesn't have to happen, but it could be a healthy scenario as long as price kind of holds in here. What we don't want to see is one of these, of course, right, where we peaked out here on 817, right, and then we checked all the way, we took out we kept going, there was no stop, right? So we'll see again how this goes. I would also keep an eye on things like the McClellan Summation Index. Right now that's in a bullish crossover, and even today the breadth was positive for most of the day for most stocks, right? If you look to see if what the breadth was in terms of the overall numbers, right, the Dow, I'm just waiting for these numbers to come up. The Dow did have more decliners than advancers, 18 versus 11, but the S&P actually had 281 advancing. So some of the names that did gap up this morning actually held quite nicely. And then look at the Nasdaq, right? So overall, 1649 advancing, 1132. So that's not horrible numbers, right? And if you look at IWM, it actually, small caps actually finished green for the day. So we're continuing to see that outperformance in small caps over growth and the Qs, basically the Q stocks, which underperformed for the day. So again, very different than what we've seen in past years, but this is the trend in 2022, and that has certainly continued. Let's just so again, this is kind of what I would be watching here with NASDAQ is, this could still possibly be an inverted head and shoulders, left shoulder, head, right shoulder. But a lot of times what I notice people do is they anticipate patterns before they're an actual pattern, right? And they make a decision before they get the signal because they want to be early. They think that they found something, but I would wait. I would wait till the Qs get also, not only above this neckline, but above the 50-day moving average. There's no rush, right? If you think really something big is going to come out of this possible, I'll say that again, inverted head and shoulders, then you would be looking for a move like up to here. So why do you care if you miss this little bit, right? Maybe if this really turns out to be that, maybe the Qs can get up to the 200-day moving average, but there's no rush because we've seen all types of patterns that could possibly, before they're a pattern, look like something, and by the time they show themselves, it may not be the picture that you were originally looking at. right? And of course, here's IWM getting very close to its 200-day moving average as well. Even though you've got a red candle there, still gained on the session. I mentioned I would talk about bonds really quickly. This is disappointing. Bonds kind of came up and tested the 20-day moving average today, and that failed. So, keep an eye on bonds. Also, we did hit, this is a chart that I tweeted out this morning, basically saying that we're hitting some resistance. So this was a flat out rejection of the top of value. Okay, so that's the top of value. Also UUP, all the currencies against the dollar were very strong this morning. Now this didn't back off too much, but you could see we're just kind of sitting here on the 1 hour chart. Right, here's what the daily chart looks like. Right, and we are, for now, the US dollar ETF is holding the 50-day moving average. One other chart that two other charts that I wanted to mention. I started with the S&P, talking about how it's coming back in and back testing the break above the 50-day moving average. Also, I said that on the smaller timeframes we have some things to notice. We were talking about this in the room. We broke into the value area. Notice that it says bearish 80% rule. That means that there's an 80% chance that we go all the way from one side of the value area to one, and it's just one pass. You get one pass through a value area and that's it. Where this would negate is if we get back above 38.75. One of the things that I said in the room was, hey, we're kind of coming back up here, and there could be a failure that comes, right? You break into something, you come up with kind of a weak retest, which is the 38.75, and kind of failed here. So we haven't moved too far down, but I would be very cautious while it says 80% rule in there. What about I didn't cover the Qs, but that also has the 80% rule in effect, and we almost went all the way through it here. All right. So again, here was your move pre-market, and pretty decent selling pressure there. All right. So that's the indices. I mentioned I would give you my view on for the Fed tomorrow. It's comical at this point. I think I talked a little bit about this in yesterday's video, but I actually saw there was some notes from JP Morgan that I was reading from earlier. Let me see if I can find those. JP Morgan, we expect the Fed to slow its pace of hikes to 50 basis points at the December meeting and pause after one more 25 basis point hike in the first quarter of 2023. I cannot make this up for you any more than that. Guys, these brokers, right? These strategists who they pay all these money for these strategists, they're just quoting Fed fund futures. Again, I know I spent some time on this in yesterday's video, but we do have a Fed meeting tomorrow, so it's important. But yes, these guys are goofballs because tomorrow it's 75 basis points. Right? I mean, you don't even have to predict. It's what the market is telling you, right? And then, so again, this is what the market currently. This is Fed fund futures, right? And the Fed does pay attention to this, and they make their adjustments based on this, right? So yes, it's 50 basis points for December, right? And then, oh my God, what are they going to do next? Well, let's look to see what Fed fund futures are pricing in for February and March. Now you can't see it's not perfectly clear, but it's probably going to be maybe 25 and then another 25 thereafter, right? So it does diminish after that, right? So yes, JP Morgan reading Fed fund, like why not just say that you're reading Fed fund futures? I don't get it. Goldman did the same thing over the weekend too. Oh, well, we think it's going to be 75 and then 50. And yeah, that's exactly what the market is telling you. Just say that's what you're quoting. It would be a lot simpler instead of saying that you're pulling a rabbit out of the hat. You're just reading what Fed fund futures are telling you. So this is pretty accurate in terms of the current situation. Remember, we won't get another CPI report until the 10th of November. So that's, we're in November, so it's a couple weeks away, but that's when the adjustments could change. Meaning if inflation doesn't come in, right, then this may get pushed out further, right? You may see 50 basis points. So again, it's really going to depend, and how do we know this, right? Because we've already seen the last couple of reports, inflation have moved this timeline out a bit. So bear that in mind. It's really that inflation is what's going to happen here. So what do we expect for tomorrow? Well, I don't think really, considering going back to inflation, which hasn't gone down yet, Powell's probably going to say the same thing, is that we're going to raise interest rates until we see evidence of inflation going down. Now, he's going to get a whole bunch of questions, and we're going to see whipsaw moves in the press conference. Remember, the headlines come out at 2 o'clock. The press conference is at 2:30, and that usually goes on for about 45 minutes, give or take, depending on the how long the Q&A goes for. But he's going to talk about probably how we see some things inflation wise have come down, because they have, right? Shipping containers, they've come down. Lumber prices, they've come down, right? He could talk about maybe that, housing, the demand has come down. I don't know about prices yet, but the demand is falling, right? But then he's probably going to get another question about labor, and labor has not come down. So the labor market is very strong. The rental market, I don't know, I haven't analyzed the rental market numbers, but that's another big chunk of what the CPI report is, and I don't think that has come down much. So those two big things, I don't think we've really made much progress in, and I think he's going to back that up in his Q&A. And he's probably going to say, remember what we've heard so far from the Fed speakers is they don't want to move away from raising rates too early until they see strong evidence that inflation is coming down. And guys, we just don't have that yet. So I think I can't really expect him to be dovish tomorrow, because we don't have any evidence of that. Now, will be interesting is, so again, 75 basis points tomorrow, and he's probably, why would he commit himself to saying anything when we don't have any of the data yet? Note for the 10th of the month, they are expecting like a pretty high read of inflation. I don't know why. I don't know where they come up with these numbers, but 0.5, 0.7, and 8.1. So we're not going to hear, like, I just find it very hard to believe that we're going to hear anything else than they have a job to do, and they'll continue to monitor things go. So I'm not expecting anything really positive for tomorrow. That's my prediction. Do we have some political crosswinds going on? Probably. I wouldn't be surprised if Biden picked up the phone and said, hey, help me out, right? The number one reason why people vote is usually, again, on average, I'm not talking in particular because everybody has different views, but the majority of people vote with how the economy is doing. So if you're in the hot seat and the economy is not doing well, you probably want the Fed to pump the brakes, right, on what they're doing, because they are really, by raising interest rates, they are making it more of a headwind for the economy. So that would be the only surprise in there, is that maybe they dial down the rhetoric for a political reason. But other than that, I just don't see them being dovish. I would think more hawkish than anything else. So we'll see. And all this other stuff that you hear on TV, on different financial media things about a possible pivot, you could talk about a possible pivot next year, in the beginning of next year, when things change. But there's no reason to talk about that now, because we don't have any data, nor does the Fed, right? Unless they're going to come out pull some rabbit out of the hat that is some other inflation point that we don't have. So that's it, guys, for my view for tomorrow. Again, I spent a little bit more time there, but it is what it is. Now, does that really change anything? No, I mean, I think, I put out a note earlier about, the Great Reset. We're probably, I do think that we're through most of the damage. And if the timeline stays like this, I'll bring this back up. If the timeline stays through this, we're now in November. So this is 3 more months, and we could potentially, as long as the inflation doesn't get worse, we could be done with the interest rate hikes in a couple months, right? And maybe, probably, again, I'm calling my inner Powell here, but probably they're going to keep rates stable for a while to see if the inflation has in fact come down, right? If the medicine works. So you're gonna like, my message in yesterday's video was think about a game plan for next year, right? And notice what is outperforming again, right? And if you look, you know, to me, like I played Valero today, and that was one of the trades and one of the, you know, the refining trades. But, you know, we could go through a couple sectors. You know, energy's holding up very well, right? We've talked about healthcare a number of times. You know, even biotech did pretty, you know, decently today. It was up today, but this has a potential to kind of come over the 200-day moving average. So I think that there's going to be some positives, and then, you know, we already talked about tech going down and so forth. You know, I would, you know, wait to see if this does kind of come out to be an inverted head and shoulders, but I wouldn't surprise if it breaks and just kind of goes sideways for a bit. I just don't see enough positive catalysts right now for overall, you know, technology. So, you know, think about, you know, possibly overweighting value and some of the more, you know, not crazy valuation type stocks, more quality names, and maybe underweight some, you know, big cap growth for now, right? That's been working pretty well, but that could be a strategy going forward. All right. I always show my trade blotter, right? So, you know, I mentioned I did a bad trade in the beginning of the day. You know, again, there's so many growth names. I thought that we might get a little bit of a rip up for the first couple hours. We didn't get that, right? So I got stopped out of this trade. And that was basically it. You know, I have some SQQ on for a little bit of a hedge here, but not really doing too much else, right? I got out of my XLV position in the morning. I took advantage of the gap up. Also had a nice winner in this NVIX. I held the last portion of the trade into earnings. It actually went up to 122. I sold it at 119, but this was a nice winner for me. I held this all the way from in here. So, you know, good job with that. Bad job with the day trade today. That's kind of how this market has been lately. A few other things that I'm watching for the for some names that reported. You know, how about this name, right? Again, it doesn't mean you have to avoid all of tech, right? But I think the names that have had good earnings, like this Gartner, I've traded this name before. It's not an easy trade. It's more of like a swing trade name, but I think this goes up to 334, right? And I started a position in this. All right, down here. Right, my target is up at 334. SMCI had you know, they pre-announced. I think that was about 2 weeks ago, but look at them go. Right. So this is the tech that I would want to be in. All of the other stuff that's in downtrends, let them stay in downtrends. Wait for them to come out of downtrends. That's, again, I'm not giving advice, but I'm just kind of telling you how I'm trading this market. All right, guys, that is it for today's video. Have a great night. Again, don't forget, right, if you're interested to see how we're going to tackle the rest of this year, as well as formulate a plan for next year and more in detail, sign up to trybackatradeGroup.com. Have a great night, everybody.